Wonderful good day, ladies and gentlemen. We are at the Invest show here in Stuttgart today. It's the first day of the show. And with me here is Bruce Bragagnolo, the CEO of Timmins Gold, one of the most successful gold stories in the last years. They went very, very fast into production. And the company did 2 acquisitions this year already. And this is the topic I want to talk about with Bruce now. Bruce, pleasure for taking the time.
Johan, good to be here.
Well, Bruce, I said it, you had, not a bad year last year, and you did now 2 acquisitions. Can you comment a little bit on that?
Sure. Maybe I'll just grab that out of your hand.
Sure.
I intend to have the mic for a little while. So last year was a great year for the company. We welcomed 5 new directors during the year. After that, we've been drilling. We managed to find high-grade gold mineralization underneath the current pit design, which we think will have significant value for shareholders going forward. And then on top of that, we had a record year. We produced over 120,000 ounces of gold, and we reduced our costs by 20%. So in this era where everybody's trying to reduce their costs, our operational team on the ground, led by our president, Arturo Barias, did a fantastic job of really optimizing the mine and did a great job reducing costs. Then, at the end of the year, we managed to buy the Caballo Blanco project, an open pit heap leach project in Veracruz, Mexico. And the Caballo Blanco project will be a nice pipeline for us going forward. It'll be a great project over the next couple of years as we permit it, as we build it. And then more recently, and this is only the last 4 months, we also are doing a plan of arrangement. The shareholders of New Strike Capital have agreed to put their faith in our operating team, and we're going to do a merger with the shareholders of New Strike and combine the companies, and that will put the Ana Paula project into the new company. And the Ana Paula project is a high-grade open pit project in Mexico, in Guerrero, with a mill. And we're going to be looking at all the ways we can to optimize the pre-feasibility study, maybe a little more drilling, some metallurgy, and we intend to advance that project rapidly to production. The PEA says that once in production, the cash costs will be $486 an ounce, and the all-in sustaining costs will be $526 an ounce. So we feel we've taken the opportunity in a bad market to enhance our cash flows, to reduce them once both new projects are in production. That'll reduce our cash costs by $200 an ounce to ensure we make money in any gold price environment. So we protected the downside, and if we get some upside in the gold price now, then we're really going to see the company fly.
Fantastic. Well, that sounds like a great game plan also for the future. And I find it very interesting that you are doing this now in this low price gold silver environment. So obviously, you want to be protected on the one side for the future, that you make sure that you have the growth. And on the other hand, I'm sure you're taking advantage of, let's say, good bargain prices.
Well, if you don't buy now, when things are relatively inexpensive and available, when can you buy?
That's right. How do you want to finance all those new setups? I mean, that needs money, obviously. You have a positive cash flow. You are still earning money, of course, despite the low prices. But what is the plan for that now?
Well, the first thing we have to do is look at what the capital requirements really are for each project. We've been relying on information from third parties and others. So we have to get into each project, spend the rest of the year trying to really get a handle on what the actual costs are going to be. By the end of the year, we'll be a lot closer to making a production decision with real costs. And at that point, we'll be able to make a decision about financing as well.
You just had some results out which were, I don't know, maybe not really satisfying. They were okay, but I think maybe you can comment a little bit on that.
Yeah, we're in a low-grade part of the mine plan, for one thing. And we just had a quarter that wasn't as good as our previous quarters. We'll catch up through the rest of the year.
So it was like a one-time thing.
Well, if you look at our last few quarters, it's been the lowest quarter for the last 9 or 10 quarters. So, yeah, it's just one of those things that happens in the life of a mine. and now we'll be catching up for the rest of the year.
Great. Fantastic. Bruce, thank you very much. Great update, and I'm sure we're going to have shortly some good news on your new project.
Yeah, let's hope so.
Great. Thank you very much. Ladies and gentlemen, it was Bruce Bragagnolo, the CEO of Timmins Gold. Well, you heard it. They bought in 4 months 2 new projects, and they want to bring them, of course, into production so they can finance the thing out of the cash flow on the one hand. On the other hand, I'm sure they will get a good project finance on that. And one is for sure. Now to buy good properties at a bargain price, it makes really sense. So you see the management is planning on the future. They have a long-term view. That's what we like also with the companies. And check out Timmins Gold. I'm for sure at those bargain prices with the stock. That makes sense to have a look on it. Thanks and bye-bye from Stuttgart from the Invest.